Alright, hello guys. Today I want to talk about a few topics. Recently, I've been joined to this cryptocurrency in Malaysia, and I just wanted to write about some articles, and some of you guys actually gave some ideas about what to write. So, some of these from Marcus, Ozir, Azam, Irfan, and all these guys. So I will slowly address the questions one by one. Probably I can finish it as soon as possible, right? Okay, so I will finish and go through one by one from Marcus first. So he mentioned to terangkan staking, margin, futures, LiquidSwap, dual investment inside of Binance. Okay, I'll go through one by one, but just to make sure that everybody is familiar, since I think there is a lot of Binance users here. Okay, so I'll go through staking first. But before that, just wanted to share with you guys that for Binance, if you guys must go inside your dashboard, there's actually something called Binance Academy. Yeah? So this Binance Academy is actually it's like your textbook lah, right? Basically, whatever topic that you want to find, everything is here, right? If you want to search for staking, you can just type here staking, and some of the topics will actually come out: proof of staking, what is staking, and so on, right? Okay, so I'll just do a quick run through about staking here, just from the demonstration. Okay, so give me a second. Yeah, okay, staking, right? Okay, just go through shortly. Okay, staking is basically how you can actually put your cryptocurrency that you have actually purchased ready inside your Binance spot wallet, and from there you can actually put it into the system through a staking, Binance staking. And with doing staking, you can actually earn the rewards. Okay, rewards in terms of interest, like how you put money into the bank. So they will give you some rewards for staking. Okay, so no need to go into too much details here. But if you guys want to check, you can just read here from the academy, right? Okay, so basically how you do a staking is actually there's a few methods here. Let me just go inside the Binance example from the dashboard. I can show you the staking that I have done so that you can have a more proper demo here. Okay, it is under earn, yeah, finance, Binance earn. All right, so staking can be a few types. It can be the flexible savings. LaunchPool is also considered as a part of staking. BNB Vault, which is the Binance coins token, you can put it in the vault as well. Okay, so there is flexible savings, fixed savings, and high risk products. So I will just go through one by one, right? Flexible terms is kind of like this. For example, you can actually put your coins. Let me just do an example and show you. View more. Okay, so flexible savings. Okay, you can see flexible savings here. I can show you some of my history, how it looks like. So this is kind of more easier to use the staking. Okay, let me just show you how the staking works. Okay, all right, so I have actually got some BTC that I put inside the flexible staking. So what you do is they will actually calculate for you the APY. This is the yearly APY, but they will pay out the API based on a daily rate. Okay, so what you do is, if let's say you got some BTC, and then you can just press transfer here. You press max here, and they will calculate the amount, and you can just press I agree, and you can do the transfer confirm. But I do not have enough here, so I cannot do the staking for here, right? For example, this is one example. So this is one example here, or you can put ADA or whatever you want. So for this flexible savings and lock staking, the difference is that the flexible savings, if the interest rate is slightly lower compared to the lock savings here. Is there any difference? I would say there is not much difference, just in terms of let's say you want to redeem the product from flexible versus the lock savings. it is slightly different. So for example, for flexible savings, if let's say you want to redeem it, it is not have any penalty, and it is instant, right? Let me show you here in the FAQ. Okay, give me a second. So flexible savings here, right? Flexible and lock. So lock you will kind of put into the system, and flexible, it is still more flexible. Okay, so what difference is from the lock? Yeah, we can say that the Binance savings, the lock savings will transfer the product from your wallet. Okay, so if I subscribe to flexible savings, how can I redeem, or when can I redeem? You can actually redeem anytime. So if you redeem the flexible savings, you can do a fast redemption or the next day redemption. For the lock savings, is also the same. But if let's say you do the lock savings and you redeem it, there is some cooling off period. Means you won't get the token as quickly as you get the flexible savings, because it is supposed to be lock. So if you lock the savings, I give an example for USDT here and USDT. So this is the flexible rate, it is 6%. This for the lock savings is 6.31. And if you lock for 7 days or you lock higher days, the rate will increase. Okay, this is an example here. So you can just do this, transfer, put max, put whatever amount you want to put here. There is some minimum, and then you press I agree, then you do transfer confirm. Okay, so they will actually put the date when you want to put, when is the redemption, right? And you can actually automatically renew the flexible savings here. Okay, so if you want to do the savings here, you can do the staking from either the flexible staking, the lock staking, or if you are feeling more high risk, there is also actually something called high risk product, which is DeFi staking, for example. But bear in mind, if you do some DeFi staking here, for example here, this sort of products, let's say I do this. Yeah, DeFi staking, there is a video guide here as well, right? And they actually have a slight risk for some loss. So let me show you an example. Yeah, so this DeFi staking is basically you can provide your crypto through the smart contract, and it actually provides higher earning because there is risk. Okay, so there is a potential risk here, and the advantages is that you can just press whatever that you want here. Let's say BTC, flexible lock, and then click here. But then there is a sold out because a lot of people are doing it, right? So that's why there is there. Okay, so if you redeem early in the risky DeFi staking, they will actually deduct all your interest that you earn, right? So basically, if you buy something that you are not going to sell for a long time, I would actually recommend you guys to actually put in the lock staking, not the DeFi staking, because DeFi staking is slightly more risky, and you can actually look at the video guide here to actually show some of the examples here. Okay, and there are a few things here, and how long do I need to lock up my funds for the DeFi staking, so they can actually return it here. So lockup staking is 1 day. The fund will be unlocked on the next day, T+1. So T+1 meaning if let's say you lock today, tomorrow you want to when you want to redeem the fund, it will be extra additional 1 day here. Okay, so that is one thing here. And then if you want to redeem earlier because you want to sell, or maybe you don't feel comfortable, it actually also have an additional day here. Okay, so this is a few examples for the staking. And actually, if you want to do the staking, you can actually do the staking inside Binance, or actually you can also do the staking outside of Binance. The outside of Binance staking is slightly more complex, but I have another continuation for this, how to do the external staking. Okay, I will go through that in another profile video. I will share with it. But let me just go through the other topics first. So this is about staking and margin, right? Okay, let's first go through margin for now. Okay, margin trading. So margin trading is basically like this, yeah. So let me show an example. Margin trading is, you can take example for this margin here. This is margin trading. So basically when you want to do margin trading, they will make you watch a video and they will make you do a test as well. Okay, and basically what the difference is that there is a additional leverage here. Can you see? There is cross leverage and isolated leverage. So basically it's like making sure that if let's say you have $100, you can actually amplify the gain or amplify the losses. So meaning if let's say take example this BTC, if it's moving at let's say 40, you can actually amplify the 40 here based on the risk, based on the leverage here, the margin trading. So just go through some of these. All right, here. So this is the consider the leverage here. Spot is the normal trading that you normally do. Cross trade means you can actually borrow money to do the trading, or you can trade normally, or you can do a repayment for if you borrow the loan. So it is slightly more complicated for this margin trading, meaning to say you can use 3 times the leverage or 10 times the leverage, right? So then you can do the normal trade as if you do a normal trade, but make sure that there is extra funds, because you need to transfer from your spot wallet to your isolated account. So it is not same as the normal spot account. So I usually for the people doing the forex or trading into the currency pairs, this sort of margin trading is almost similar like the leverage trading, right? Like you put leverage, but there is some difference in terms of the rules, and also there is something different in terms of the borrow mode and repay mode here as well. So you can actually borrow money to do the trading as well. For this, I wouldn't go too into it, because there are some extra fees and also highly risky, I would say. So I wouldn't really recommend this to go through unless you are very familiar with this platform. And as I mentioned, you can actually look through more from here, the academy, and look through the leverage trading, the margin trading. Okay, and futures is also something pretty similar here. Future coins and future margins. So let me just show an example. Okay, so they are having the same sort of basically the same kind of chart. The difference between the spot trading and the future trading is that you can actually buy, means you buy low, you sell high, or if let's say you know that Bitcoin is dropping down, you can actually short it. So means short, sell or short means you expect the Bitcoin to reduce. So meaning you can make money when it go down, then you short, or you will make money when it go up, which is buy. So that is the difference. And here in futures, you can also adjust the risk, right? So basically, like I mentioned, every $10, let's say every $10 that moves up, you can actually make it to have a leverage. So if let's say the leverage is 10 times, and if you move $10 up, it can be, the profit can be $100 instead. And if it goes down, it will be $100 downwards as well. And also take note that the fees for these futures it is slightly different, right? And they also use a different account here. So you need to transfer from your normal wallet, your normal trading wallet, to your futures wallet, because there is considered a different account. And if let's say your margin ratio, it is 100%, means you got a margin call. So it's basically like trading in the forex, where if your account does not have enough balance and your position is going against you, so basically your account will get liquidated, or they call it margin call. All right. So this is something as well, mostly more suited for the traders which are doing the leverage trading through forex, right? But for the normal traders, I would suggest to use and go through the spot trading. Yeah. Okay. So that's just about margins, futures, and there is something called LiquidSwap. And let me just go through LiquidSwap. LiquidSwap, it is basically something similar to staking, but it is another word for LiquidSwap. It's something like liquidity farming. That is another more easier words here. So it is basically LiquidSwap. There is risk as well. You can lose money here, for example. Okay, so let me just show you an example. Yeah. Okay, so this is a liquidity swap. So if let's say you hold 2 tokens and you want to provide liquidity into the market. So for example, if everybody is trading in the normal spot market, right? The spot market, you buy and sell, you buy and sell. So they need liquidity. They need a lot of high volume and transactions in the market. So how can everybody buy and sell so frequently, right? So there are people that actually provide liquidity, right, to the Binance platform through this liquidity swap, right? For example, this BUSD to USDT here, right? It is actually the same, similar to this. So let me just open up one example and do a comparison. Yeah. Okay, let me see. BUSD to okay, this one. Okay. All right. So this market here, right? This market here. Let me just show you. Okay. So you can see a lot of transactions happening here, right? And all this liquid order book buy and sell here, right? So for this market here, there is a huge volume here, 506 million, right? So there is people that are actually providing liquidity to serve this market, and from this BUSD USDT pairing, which is this one, right? You can actually put in your BUSD and also your USDT into this liquidity swap here, so that when you put in here, it actually allows the transaction to happen here. So like for example, if you make a trade in the normal market here, you will be subject to some transaction fees, right? Either in USDT or BNB, right? So those transaction fees, it is actually shared with Binance platform, and also the people who provide it from here, the liquidity swap. But the example is quite simple. Then everybody will think, okay, this is very easy to make money, right? We just put the liquidity swap here, and then people who buy and sell transactions, they'll make money, right? But the risk involved here is like this. If let's say this fluctuation, there's a fluctuation in price like this, right? 0.9914 or 1.0046, right? If two of the assets go up or go down very volatile, right? Your pairing, which is this, let's say this two pairing, when you put it here into the liquidity, it needs to be 50% BUSD, 50% USDT. So meaning to say, if let's say you put $100 worth, or maybe let's say this 76, it needs to be 38 USD BUSD and 38 USDT, right? It needs to be half half, right? And the risk that's involved is like this. If let's say it drops like this, right, means 1 BUSD is you're getting 0.99 USDT, right? So the balance of 50-50 is not there. So they will actually the market will actually adjust so that your BUSD will actually be lesser and your USDT will be higher. So that fluctuation of like this sort of thing, right? It will actually cause something called impairment loss. So this impairment loss is it's basically the market will actually adjust the ratio, your 50-50 to become for example here maybe it become, for example this one they will do maybe it becomes 60-40 here, and then maybe here is like 55-45, etc. as an example. Okay, and let me show you one transaction that I actually have done before. Okay, so I found my liquidity swap example that I've done previously, right? Okay, for example, so I've actually put in some BUSD and I've put in some USDT, right? So I started off with this amount, right, at 21st, right? So I started with 26.10, and after that there is a share change right here. So it's supposed to be 36 total, right? 26 plus 13. So you can see that it's supposed to be 18 first, right? But during the transaction, like I mentioned, right, when there is some transaction difference and change, the 50-50 doesn't happen. So when I did the redemption, when I started with 18, when I redeem it later on, it became 26.10. So the market actually adjusts it, right? And I would just doing this to test out the profit sharing, how much PNL can you get. So basically I just tested for 2 days just to test it out, and I saw that the market actually make some money from here, like 0.02 USD, which is a bit less, right? So how they pay out the fees and how much they pay out for the PNL, it is actually based on your ratio, your amount that you put in, right? So if let's say for example, inside here, this BUSD, inside this BUSD USDT thing, let me just go inside here. So if let's say the BUSD and USDT pool is let's say 200 2 million 2 billion, right? 200 million, hundreds million, billion, 2 billion, right? So if let's say you put liquidity for maybe 200 million, then your PNL, your sharing of this ratio here, it will be more ratio. So unless you have a very big capital or asset, right, that you have here, so the sharing will be more here, right? So that's one example, right? And they will actually also charge you certain fees for sure upon redemption and also upon transaction. So there are a few here like Euro, USD, and other sort of stable coins, so you can have a look. Or if you want to check it more, you can check on the tutorial here. Okay, so that is actually for LiquidSwap. And last but not least is dual investment. So dual investment, let me see. Let me check this dual investment. Yeah. Okay, right, dual investment. Okay. So dual investment, it is basically something like you putting two coins together, right? And then basically you can earn in the both of the currency. I've not really played with this so much yet, right? So I don't have a lot of expertise for this, but basically it is basically something similar like the liquidity the liquid swap, right? But slightly with a different ratio. Okay, so that's something that maybe if you want to explore more, I would advise you to come to Binance Academy here, and then you can just search for dual investment. So usually for me, most of the time, based on my understanding here, is that um, there's so many things that you can do here, right, in Binance. So only do the things that you want to do. I mean that you understand, right? Because if you don't understand something, then you shouldn't be playing it. Because if you play and you don't understand, then you will pay more fees, and then you might lose more money. So things that you can do, which I would say it is more safe or relatively safe. It is the spot trading, right? The spot trading, just buy and hold in the spot market here, right? This spot market here. That's one thing. Or you can do the Binance Earn. Binance Earn is another one here, right? You can do the flexible or the fixed staking, right? LaunchPool staking is also very safe relatively. So basically, it's like this. I've actually did this before, just to show you an example. So a lot of new projects, when they want to gain some liquidity in the market, they will actually come into this launchpad. So the launchpad here, it is a kind of staking. So actually, you can put in a different type of coins to actually farm or get new token, which is Dodo, because they are new token. So they are actually trying to increase their liquidity into the market. So you can put BNB, you can put BEF, or you can also put BUSD previously. You can put BUSD, right? I can show you my example here, staking history for launch pool farm. It is very low risk for this launch pool, whatever projects. So whatever that if you're not using the your crypto, let's say BNB or BEF or BUSD or something like that, you can actually put it on the launch pool. It will come. It's a seasonal thing that will come in and go. So there is a 14 days mining cycle, or there are different cycles for each of the coins. So let me just show you an example here. Search. So I can show you an example for Launchpad. Yeah. So previously Launchpad, I transferred some BUSD, right? I put this amount, then I earn some Dodo. I also did the previous project lead and get some free lead. So I put DOT into the project, I stake the DOT, and I get free lead, right? And then these tokens, all the new tokens, if you're not using, you can just sell it off into the market. So this is something good, flexible as well. And if you have some BNB, you can actually buy some, because you can actually get a discount for using the BNB. Let me show you an example. It's for the fees. So yep, so here is my previous distribution Dodo that I got from the launch pool, right? You can see some bulk here. I also get some rewards. Okay. Alright. So you can see some here are my rewards, right? So I put some I stick some BNB into this BNB vault here, right? So basically you just put BNB. You can stake your BNB here. Yep. So you can put your BNB stake here, right? And you can actually earn some rewards like this. Okay, and the reward is daily. So BNB Vault, I give Dodo. This was yesterday. BNB Vault, 2 days back, Dodo. So they can actually add up. So I actually use Gates Dodo tokens up to 0.1 and indeed 0.09. But I didn't put much BNB. It's like 4, 5 or 6 BNB only, right? And that is all for the things that I want to share. Flexible, LaunchPool, as well as BNB. And there is also the margin future LiquidSwap. So I think this is the few things that I want to share, and hope that I brought some clarity here. And for those of you guys that wants to know a little bit more, you can shout me out here, and you can just follow me on Twitter as well, because I do share a lot of articles and news as well. So that's it. Thanks for watching, and I'll be sure to do more videos for some of the other questionnaires here as well. Either in video or in article form. All right, that's all, and thanks for watching. All right, take care.